Hey, I'm John Briggs. I thought I should reintroduce myself because I got a haircut and I could be unrecognizable. Today is our last day and I'm excited for you and the big reveal that's going to happen at the end of this video. So far in the challenges, we have talked about the 4 key numbers to a healthy business and healthy cash flow. And you should have entered in all of those numbers by now into your Know Your Numbers worksheet. Today we're going to talk about another important number. It's just not a key number, and that's operating expenses. So for purposes of understanding a healthy business and healthy cash flow, we're going to give operating expenses this very simple definition. It's every other expense we haven't already talked about. Okay, there's going to be a little bit of math involved in today's challenge. Luckily Excel can do that for us, but I want to show you where to find all these numbers because operating expenses is not as easy to find. It's not as straightforward as some of the other numbers. So I'm going to first show you a profit and loss statement that I've been using for our examples here. Now this is from an actual client. We've just changed the labeling for confidentiality purposes. To start understanding my operating expense number, I'm going to come down here to total expenses, which is $463,138. This becomes my starting number for figuring out operating expenses. Now what I want to do is make sure I don't double count any other number that we've already talked about. Meaning if I've already entered it into a previous day, I want to take it out of my total expense number. So let's go to our worksheet, and the easiest way to do this is to be systematic. We're just going to look at every number and ask ourselves, was this part of that total expense number? So $132,120 of coaching expense is part of my expense number, which is here under wages. So I definitely need to take that out. The next line item, cost of supplements and cost of apparel. For the sake of how we have these financials structured, it is not part of total expenses because it's in this section under cost of goods sold. So you want to check to make sure where your numbers are coming from. Since mine are not part of total expenses, I am not taking them out. The next expense we have is W-2. This is part of my total expense number because it is also here in my profit and loss statement under wages. Okay, see how I'm just going down systematically and I'm just trying to make sure I'm not double counting any other number. Distributions, because they've booked these correctly, is not part of total expenses. If you've expensed the money you've paid yourself and it is part of total expenses, you would take that number out. In our example's case, they didn't, so we don't take it out. The next expense is cell phone. For the sake of our clients, they put cell phone under utilities here. Most people just have cell phone or telephone expense directly listed out. So feel free to, anyways, if it's included, you got to take it out. Next number. Well, let's talk about the next number so we don't have to keep clicking back and forth. Travel, car payments and gas, eating out and fun crap, health insurance, and then there's 2 expenses under other. So let me show you where those are, just to kind of give you an example, maybe help you find your own numbers. Travel, that's there, so that's part of expenses, I got to take it out. Car payment and gas, that's all under truck payment, so I got to take that out, because again, I don't want to double count it. I already have it entered in once. Health insurance, or eating out and fun crap is next. That's commonly called meals and entertainment for accounting purposes, so try to find that one. It's included here, so we need to take that out. Then we have health insurance, $1,480. It's included. Got to take it out. Under other, I have 401k fees, which is for the owner's benefit, which is why we've already put it on our worksheet. So I got to take that out. And then our client happens to be using a really awesome tax strategy that we taught him that allows him to expense $15,000 a year under rent expense. And that saves him about $5,000 in taxes, which is like awesome. but that's been included already, so I need to take that out. I'm just keeping going in order. Our day 4 numbers, we don't have any here in our example. If you do, chances are they are not part of total expenses, so you really probably wouldn't worry about them. And now after all that is said and done, the number that I enter in is $263,894. Remember, I started with $463,138, and then I had to take out all of these other numbers because I had already included them. We cannot double count. Now, it's time for you to go and figure out what your operating expense numbers are. So go ahead and pause the video because it'll make this next part make a whole lot more sense. Seriously, stop and pause the video and enter in your operating expenses into Know Your Number worksheet. Okay, and now I'm assuming you paused the video and you're back, and we are now going to do the big reveal. I don't know if you've watched some of those weight loss shows like The Biggest Loser, where at the finale they have the really big oversized picture of the contestant when they were really fat, and then the thin, healthier, skinnier, spray tanned contestant runs through the big picture for the big reveal. It's very exciting. Well, this moment could feel like that for you. Or it's possible this big reveal could feel like a swift kick to the area that sometimes or always hurts to get kicked in. All right, so let's go back to your worksheet. Now, most business owners are curious, so you might have already seen this. If you have, that's fine. If you haven't, go ahead and click the Instant Assessment tab here down at the bottom. The true purpose of the 5-day challenge was for you to run an instant assessment, because this is the beginning step in taking your cash flow to the next level. This shows you the before and after picture. All the numbers you've entered in on the Know Your Numbers tab are here on the instant assessment in the proper spot. So let me walk you through what this form means. Here we have top line revenue. And then, as we've mentioned, we really need to get to real revenue because that's the true size of your business. And in order to do that, we take out what you've paid your coaches per class, your supplement costs, and your apparel costs. And so now we have your real revenue. And this real revenue is what these healthy business percentage numbers are based off of. In case you're curious, we have this third tab here. This table of healthy business percentages we are using from a book called Profit First, written by Mike Michalowicz. And then we look at the other numbers: profit, owner's pay, tax, operating expenses. Again, all those numbers are getting pulled from the numbers you've already entered in. Then in column F, what we have are your actual percentages. So what we're doing is we're saying 33% of $400,000 is 133. So he spent 33% of his real revenue on paying himself. He has spent 66% of his real revenue on operating expenses. Right here, this box is a check figure. We're really hoping that your number down here is very close to your real revenue number. Technically, in a perfect world, those numbers would exactly match each other. But since we're not worried about perfection in the instant assessment, we just want to get close. We just want the number to be close. In this example, we're $3,000 off, so I'm good with that. Okay, column H calculates, based on the real revenue, if the business used the healthy percentages, how much would have gone to each account. And so there we have our before and after picture, because you can compare, which is column I, we compare what was in column H to column E, and that tells us how off or how on we are. And there you go, before and after picture. Your results are going to be unique to you, but I can tell you what you see here is a common scenario, which is the operating expenses are too high and the owner is paying himself basically what he should be paying himself. The problem with this scenario is that the owner has to come out of his own pocket to cover the tax burden that the business generated, and he gets no benefit for owning the business. He gets no ROI on that. The other common scenario that you might be seeing is that the operating expenses are too high and the owner also isn't paying himself anywhere close to what he should be. This is much worse because he still has to come out of pocket for his taxes. He's still not getting an ROI for being the business owner. So there's some severe things that need to be worked on. Now these instant assessments are great starting points, but just like you wouldn't tell a 400-pound man to immediately cut calories and start eating the calories of, say, someone maintaining 180 pounds, you would work them into having them lose a healthy amount of weight each week. You would really adjust these instant assessment numbers and give yourself your own rollout plan. So you can tweak these. I mean, if you look at this scenario, cutting $100,000 in expenses could be overwhelming and seem daunting. But maybe cutting $10,000 expenses is a lot easier. Maybe the tax account is too high, like you don't need to save that much money. Feel free to make tweaks to make it a manageable goal for you. It needs to be an easy step. Just like in CrossFit, when you're working people in progressions, there's a progression when it comes to the financial health of your business as well. So we do offer full profit assessments if you're looking for some professional guidance on a plan of attack. Not only do we do the assessment, but we also will do a rollout plan. We're going to look at the business percentages. The rollout plan, it goes over the next 6 quarters. We also dive into the details of your expenses, and I'm talking like the nitty-gritty details of your business operating expenses to help the owner identify the expenses that can be cut or improved. I want to show you an example. So this was the instant assessment that we did for a client, and now what you're looking at here is what happened after we did an actual full profit assessment for the guy. As you can see, the numbers can be very different. We changed the numbers because this scenario is much more manageable for him. Cutting $31,000 in expenses was a lot easier for him than starting at needing to cut $100,000 of expenses. So we have charged up to $1,500 just for that assessment, but we do want to do something special for you because you've made a commitment to the 5-day challenge. For $787, we will partner with you on this assessment. We haven't had a single client we didn't help identify at least $1,000 worth of expenses they could cut without affecting their business, of course. And in the example that I was using that I just showed you, it was more than $30,000 we helped them identify. So now is the best time to invest in the success of your business. So if you're passionate and motivated, click the button below to get started. And if this isn't right for you, you at least have a snapshot of the health of your business. We wish you the healthiest of successes, and the IRS probably trains with Hooked on Phonics, and we'll see you around.